Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, good morning, traders. Welcome back to another live stream. Hope you're doing well. Thank you for being here with me. You know, I gotta say, recently I bought this new microphone, and I gotta say it's probably one of the best investments, best trades that I've had in recent times. I traded cash for something that I think ups the quality for all of us, whether it be you guys who watch the videos regularly or for people who listen to a podcast that I'm on. I think it was a worthwhile investment. I listen back a lot of times to my own, I know it sounds like really conceited, but I listen back to my own videos almost every day. Two parts. Number one, I like to see the edits that Chandler does a great job on. I like to see what he puts in there. And number two, it's self-reflecting. You know, one of the best ways, if you know anything about public speaking, and I academically don't know that much, but through experience, I've done a lot of public speaking. One of the best ways to learn and improve is simply to listen back to yourself. And so I listen to myself all the time, which sounds, again, it sounds incredibly conceited. I know, I apologize, but I do it like every day. Not necessarily that I want to like listen to, you know, the points that I made, because I already have them up here, but I listen back to my own videos so that I can hear if I conveyed them in a way that was understandable. Was it confusing at all? And I think I've improved over time with that. I still am not perfect. There's sometimes when I listen back to a point that I'm making about a chart or some sort of analysis that I'm doing that I feel like I could have explained that better. So if there's ever questions that you have, if there's ever confusion that you have from something that I am trying to point out or explain in one of my videos or live streams, please let me know. Ask questions in the comment section. I read all of my comments. I do my best to try and improve and get better at this stuff, just like you guys, you know, whether it be trading or for me, public speaking and content creation, I'm doing my best. So appreciate it. The hair today, you guys like the hair today? It's hit or miss, you know, so I've got this new styling tactic. Can I do some quick hair just before we get in? I mean, we have so much stuff to talk about, so I'll be quick here. Here's the hair routine, okay? I take a shower in the morning, and I get this question asked surprisingly more often. I still have work to do on my hair too. So I'm working on my content creation, my trading, investing, and my hair. So these are the things that really matter to me, okay? So what I do is I comb it all straight back, right? Comb it all straight back, let it just dry for a little bit naturally. Then I whip out the blow dryer. You guys know, push it all back just to give it some flow in there. And then I take a paste, right? And I just go like this. And then that helps to hold it in place. So now you guys have my trading strategy and my hair routine. So you have no excuse not to look exactly like me the next time I see you in person. So I'm just kidding. But you know, as much as there are other, you know, I aspire to have better hair over time. I've worked on it for like the year and a half. So I feel like we're making progress. What did I just walk into? You just walked into greatness, Justin. You just walked into greatness. Okay. Anyways, good morning, everybody. Lee says he does the same thing as a musician. That's cool, Lee. Yeah. I mean, it's just, I'm a musician too, Lee. I don't know if you've heard that before, but I play piano. I've played it since I was a kid. I play piano and drums. And if you guys know Frank's in a band. Well, of course you know Frank. Come on, everybody knows Frank. Frank, who comes on the live streams, trades with me. Him and I for years have had two common real solid interests together, and that is markets and music, the double M's. Okay, so what's going on in the world? Why is everything on its head right now? Well, let's go through it. So we got to talk first about indices, because the indices they are lower here this morning because of what we saw from Meta yesterday. Now, if you watched yesterday, I talked endlessly. That was like the main theme of yesterday was what's going to happen with Meta. And I gotta be honest, I was shocked to see how incredibly bearish this market was in response to Meta's earnings yesterday. Now, you may have asked, why did Meta drop 15? As my friend Jeremy from Financial Education, if anybody knows him, flipping my flapjacks is his saying. He'll say, "You got to be flipping my flapjacks," and I love that expression. It's so funny to me. Anyways, Jeremy, I watched his live stream where he was reacting to Meta's earnings, and we are down on the day, guys, 15% for Meta. This is a remarkable sell-off, and not unheard of, not unprecedented. Meta is a very volatile stock. You saw it in 2022. If you're a stock person, then you remember the days of waking up and your stock was just gone. Can you imagine you bought Meta over here and then you wake up and you have to like scroll so far out on your chart and you're like, where's my stock? Where's my stock? Oh my God, my stock is down here, right? People will have some past traumas who have traded Meta before. But Meta had really good earnings and dropped. Tesla had really bad earnings and popped. The first thing people will point at is they'll say, oh, it's all manipulation. It's not real. It's fake. It's fraud. It's scamming, whatever. Markets are fake. Here is what supposedly the story is. I'm not an expert when it comes to individual stocks, although I do sometimes trade and invest in individual stocks. It's not my forte per se. The main reason from what I've gathered as to why the market didn't like Meta's earnings was not the earnings numbers themselves, I believe. The earnings on top and bottom line were impressive. Revenue was up and earnings were up. What I think, from what I gathered, that people did not like was actually there was an increased spending back into virtual reality stuff. Now, the virtual reality labs, the metaverse stuff, the market in 2022 absolutely hated that Meta was dumping a bunch of money and going all in on, virtual reality. They hated it because there's no clear path to profitability. Could it be the future? I don't know. Maybe, right? I'm not saying it can't be the future, but Wall Street's saying we want cash and money now. We want things that are making money. Get back to, WhatsApp and Meta and Facebook and Instagram and the things that we know are consistently, provably profitable. And so I think that there was a pivot a little bit. I listened to some of the earnings call yesterday, and Mark Zuck was talking a little bit about, how that's the future. He wants to continue to invest in that area. And Wall Street just may have not liked that. Right? They may not have liked that could be the direction. I think there were also some things in the numbers that I admittedly and apologetically tell you that I don't know why they were sold off. I think there might have been maybe there was, for example, slowing on ad spend or something that I'm not aware of. If somebody has some information, please feel free to drop it in the chat. Again, there's just too many charts to keep up to date with. So stay tuned. Maybe someone in the chat will help us out. Quick look overall at the Edge Finder here today. We have US 30 bullish, SPX bullish, dollar yen bullish, dollar Swiss bullish, oil bullish, NASDAQ bullish. Lots of bullish setups. The question is, will the technicals line up on some of these indices? Is it a buy the dip kind of day on the NASDAQ? Well, here's my issue with the NASDAQ. We topped out here on Meta, and I would not say I'm not, I actually would like to potentially buy the NASDAQ, but I think maybe a lower risk entry would be a pullback down to the bottom of this range. If that happens, I might have to take some stabs at going long, though I already do have long exposure through the ETFs that I am trading options on. So I have some bullish exposure already. In terms of a momentum trade, I would like to either see a breakout. I would have liked to see this close above I probably would have bought that pullback, especially with the indices getting a bullish read officially on the Edge Finder. That's a nice change of pace. We'll take that. Let's flip it around quickly. Take a look at the bearish setups. We've got euro dollar, Kiwi dollar, pound dollar, CAD yen, Aussie dollar. So these are some of your bearish readings on the Edge Finder's top setups page so far here today. So we'll keep an eye on that and close eye on all this economic data. Today we get GDP numbers. Advanced GDP comes out in just about 3 or so minutes, which of course will have a huge impact for those of you guys who are watching gold. I do have a long position on silver, which is slightly in profit. And I am short the Russell, which I think is like flat. Yeah, so I'm basically still flat on the Russell trade and slightly in profit on the silver trade. So 2 momentum trades, several options trades going on right now. I'll talk about those later in the stream because that'll take some time. US 30 seeing a little bit of sell pressure here this morning. NASDAQ as well. You know, the NASDAQ following the Meta earnings, the reason I talked about that so lengthy here this morning about, you know, Meta's report is because the NASDAQ didn't like it, right? The NASDAQ is tech heavy and Meta is a big tech name. And the thing you got to remember about this, guys, is that I pointed this out on my Twitter. NVIDIA and Meta combined, those 2 stocks, NVIDIA and Meta, these 2 combined make up 10% of QQQ, which is the NASDAQ. Okay. So 10% combined. Now, Meta being a poor, any negative outlook for Meta negatively would impact NVIDIA because NVIDIA and Meta work closely together. In fact, Meta is one of NVIDIA's biggest customers outside of Microsoft, so they supply chips to them. So you have to remember that these things move in tandem together. So bad earnings reports for one of these things, or even just sketchy guidance in any way, shape, or form, hurts all of them. It hurts them collectively. That's why we saw the NASDAQ, you know, give back all of its gains from yesterday. Yesterday, we had a little breakthrough here. I actually thought, you know, I might be making a video today. Hey, look, the NASDAQ's breaking out. Perhaps we go higher. Well, we struggled at this level, gave back those gains, and in fact, even closed red yesterday by a pretty significant margin. My plans today, I'll go more into detail about some of the options trades that I need to do. I'm going to be selling puts on SMH. That's the semiconductor ETF. I tried to do it yesterday, but my order didn't get filled. And actually that ended up being okay because I believe semis, you know, sold off after hours. So I might get a little bit more premium for that, but we'll talk about that more in just a moment. In just a second, what we're going to do instead is we're going to get ready for this report. We got 1 minute to go. I think Frank is in the back room. We'll just go ahead and let him in and say hey to Frank. Hey, Frank, how's it going, man?
Hey, I'm good. How are you?
Good. We're coming in on GDP numbers. We got like 30 seconds to go. So let me just get set up. Frank, what are you watching going into GDP?
Tech. I'm looking at the NASDAQ. Because yesterday Meta had disappointing forecasts for Q2 that sent the stock way down, but the NAS did not really move. So
yeah, we didn't see, I thought we'd get a little bit more reaction, to be honest, from it. We did get a bit of a, you know, we got a 0.8%, I think. Let's see what this GDP number comes in. We're coming in breaking news. All right, numbers should be coming out in just a moment here for advanced GDP. The previous numbers came out. Euro is up, dollar is down. Still
maybe it's worse than expected.
Possibly. So previous was revised up slightly. We're still waiting on the numbers here. Advanced GDP.
Oh, much worse.
1.6. Okay, 1.6. So lower than expected. And markets reacting negatively to this, Frank.
That might be bullish. I was going to say bullish for the markets, but I guess not, or initially not.
Well, let's have a closer look at this. I'm pulling up the so that quickly on the NASDAQ. The NASDAQ is actually selling off on this data. Wow, Frank, what in the world? 1.6 compared to 2.5. Is that not a massive miss on GDP?
Maybe it's so lower GDP would probably be good for the stock market, I would imagine, because you're looking at the inflation stance.
Yeah,
Lower economic data is probably better for cooler inflation,
it
but
is. And the
maybe
question though is,
it's
Frank,
so dramatic of a miss.
yeah, that I'm kind of a little confused by it too, because one thing that we could point to is, yes, this is maybe good for the inflation story, but inflation, what we're left with right now, Frank, is earnings have been, mixed with some guidance from big names, not amazing. So you combine that with decreasing GDP and inflation hasn't been, we're still waiting on the inflation number on Friday. This puts a lot of weight on inflation on Friday, Frank. If we don't get a lower than expected print on inflation, that market is going to hate this. Because if you get slowing GDP and stubborn inflation, look out below, I think. Are we on the same page on that? What do you think?
Yes, and if you top it off with bad earnings or bad forecasts for the next quarter, that
Yep.
could be another room for a leg down
Mm.
on the markets.
Oh my goodness. Yeah. So we are seeing down 0.75%. This one doesn't make sense to me, Frank. The Dow getting beat up the most out of the three. I would have actually expected Russell and Dow, even though I'm short on the Russell and I don't mind that it's dropping. I wouldn't have expected these to lead the fall, because wouldn't this suggest, as you pointed out, maybe this is a good narrative for yields up? Am I missing something? Yields up. Hold on. Claims came out cooler than expected, but not by much. Advanced GDP index, they revised the previous one higher, which is strong for yields, but the actual number for advanced GDP came out lower. PCE. Okay, I am officially confused, Frank.
I think that the miss was pretty large. And that's probably not a good sign. I mean, good economic data is good for dollar and indices and vice versa. But in this narrative, we want cooler inflation, cooler economic data, cooler jobs, so we can look to rate cut this year. But maybe that miss is just kind of big. Like I was expecting, if it were to miss, somewhere in the twos at least. So
it's a weird one for me, Frank. I'm kind of lost because we've got the dollar moving higher on weak GDP numbers. Yields also, there must be something that we're missing, because why are yields up and stocks down? I think your initial reaction to, I mean, that would explain why the Russell and the Dow are down the most, is yields are popping. Ivan, help us in the chat. Ivan, why? Yes, I get this, right? We get that. But why are yields trading higher on soft GDP numbers?
and softer unemployment claims.
Yeah, and that's true, but is it this revision? I mean, this revision went from 3.3 to 3.4. That's higher. Perhaps that's looking at, okay, wait. So maybe I'm off on this, but check this out, Frank. Maybe the revision, since inflation is looking backwards, right? Okay. I think I might figure out. It could be right here, it could be wrong. They revised the previous section of data, which was hot. They revised it higher. That's the data set that we're going to be looking at for inflation. So if we're revising the previous stuff higher, that's saying, oh, well, this report that's going to come out is arguably going to have a higher chance of being
Higher
hotter
inflation, yeah. Higher
Whereas advanced
inflation and then
GDP is looking, yeah.
current output being low and then higher inflation reported on Friday could be pretty messy for everything. The yields will go up. I guess dollar will too, and then that's going to be bad for the indices.
Okay, Ivan said he sent me a DM. People are saying core PCE, so maybe I'm just an idiot. Okay, yes, here's something. Thank you to Ivan. Ivan said core personal consumption expenditure, core over core, came out hotter than expected That is hot inflation prints. Very interesting to say the least. How is that not in Forex Factory? I know I'm going to get yelled at for using Forex Factory. Frank, I get so many DMs, people saying Forex Factory is terrible for this because it misses a lot of key points. Like I have everything checked on here except for, is it a low impact that came out? No, it's not even on here, right? So I need to just switch to a different. I got to ask my friend Dan.
What about core PCE?
So check this out. I know it's kind of hard to see because the small image that Ivan sent me here. Core personal consumption expenditures quarter over quarter for Q1, 3.7% compared to a forecasted 3.4. So core PCE came out hotter than expected. But how is that not even on Forex Factory?
That comes out Friday, I thought. Month over month.
So what's on Friday? Friday is core PCE price index. Am I just getting totally mixed up here?
I mean, were they looking at quarter over quarter? I guess they report on different days. I don't know.
Okay. Okay. Yeah. Interesting.
So I guess that's forecasting Friday's number to be higher.
Yes. Okay. So that is freaking the markets out. And so, Frank, we almost front runned our own worries there. We pointed out that if you're getting slowing GDP and hotter than expected inflation, that would be super red flag for the stock market. So you pointed it out. I think we were correct. We just were missing a point there for a second. But wow, yeah, that's that is a bearish combination, right? I mean, you've got stubborn inflation and slowing GDP. Frank, does that bring back the gold trade?
I don't know, because yields are rising. So that's my main concern. I'm still long GDX, but you know, we'll just have to see. If the market freaks out today, I might just close GDX before either a break even or slight profit. I'm hovering a little bit in profit, so maybe today is just a closeout day. I don't know. I'm
watching the Russell here this morning. My short came back to life. I'm so, what's kind of crazy, Frank, is I woke up this morning and I was like, am I going to buy the NASDAQ today? But this is that's hard for me to buy into. It's hard for me to buy into. Inflation might be problematic, and at the same time, GDP prints were low. But I can't help but kind of want to be long going into Google and Microsoft earnings because I love those companies. I think they're going to continue to dazzle the market. But I mean, it's hard for me to justify buying it. I mean, I'm short the Russell this morning here. That's going well for me. I'm long silver. I know you're long, Frank. You're long gold, Frank. So those are areas of the market that are doing, I guess, a little bit better compared to just straight up, NASDAQ. What do you have any positions on NAS or SPX?
No, I had some broken wing butterflies.
They closed out yesterday?
Yeah, my last couple closed out yesterday in the morning, and I didn't take any yesterday. So today, honestly, I might look for another position above price, hoping that price stays below this level. Yeah, just because I mean, earnings can be good, but Meta was a huge disappointment.
Yep.
Big tech.
You buy that dip on Meta, Frank?
What'd you say?
Do you buy any dip on Meta, or are you sidelined for Meta?
I think long term, I mean, buying Meta at $50 lower than where it was at.
I was looking at a chart. Check this out, Frank. I was looking at this gap here that we put in. I'm kind of with you. I think, maybe you buy the dip at some point on Meta. This drop, you can't really see it. This is where we currently are at. I think you might close this gap.
I think you wait for Meta to close the gap.
And that's a $400 price tag on Meta. I don't hate it. I also have kept my eye on Netflix. That's another company that I kind of want to own. Still kind of a high valuation. If the market keeps selling, that's an area that I'm looking for. Again, I'm still short the Russell. I'm probably going to just at least trail my stop in today, trim my risk on it, and see if it wants to keep running. This is kind of a bit of a hedge for me. on the market right now because I do have long exposure through ETFs that I've sold puts on. I am short the Russell XLK and XLY. I've sold puts on. Looks like I probably will get assigned on those. VOO, I have a position. I've sold covered calls on that.
But you would want that, right? You'd want to get assigned Vanguard.
Yeah, well, so I am in VOO. Here, I'll show you my trade. So here's VOO. So I have been assigned already. So I got assigned on at 460. So my price is right here around. I'm pretty much break even right now, but I sold calls against it at 480 1 month out. So I'll collect some premium. I would actually like the market to go sideways or lower because then I could build positions on things that I like more. So we'll keep an eye on it. SMH, I'll probably sell puts on the open today, Frank. So I'll keep an eye on that one. I'll let you know if I do anything on that. But
look at Google today.
Oh, what's
they
Google
report
doing?
Today? They're down to 155 pre-market.
Mm-hmm. Oh yeah, Google might be an interesting one to watch. It's a company I love. Obviously, Frank, we should just be long Google. We are essentially long Google every single day at work because everything we do is built on Google. We use the Google Data Studio platform. We use Google Sheets. We use Gmail. We use YouTube. This is Google, Google, Google. So A1 Trading is built on Google. So let's not lose Google. So it's an important stock. So let's hope that stock continues to go higher.
I like Google. I think it's probably the cheapest of the Magnificent Seven. So
yep,
I like that play a lot. But
yep, exactly.
I am just waiting for the market to come down a little bit too.
Yep, exactly. Well, Frank, we've got other guests who are going to come in here behind you. Thanks for jumping in with me. We got Ivan who's going to join for a few minutes, and then Miko and Mark are coming in after that. So we got a full house in terms of market analysis stuff. So we're going to just switch over to Ivan in just a moment. And Frank, thanks for joining and talking a little bit with me here on the Open.
Thanks.
All right. See you, Frank. And now, guys, what we're going to do is we're going to run a quick commercial break to set up for Ivan coming in. So check out one of our sponsors who are making this show possible. And then we will be back with Ivan in just a moment.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we are back with Ivan. Hey, Ivan. How's it going, man?
Hi.
Good to have you on. Thanks for coming on for a little bit. We've got Miko and Marco coming in shortly. So what do you want to spill? Yeah, you got the show for a second. What's going on?
Yeah, so you have to change who you're listening to. You can't have Forex Factory when you're missing a key important information today that core PCE Q/Q is way above. If you saw the previous one was 2, now it's 3.7. Now tomorrow we have to price in maybe even rate hikes. I said it to you 8th of April. I said we might have rate hikes this year, and if we get core PCE at 3.7, I'm just gonna say I told you so.
Yeah, secondly, I know. We dropped the ball with the data here this morning. The dollar index is pushing higher on this data. Ivan, break it down for us. Why is this so meaningful, and why is the whole market reacting to it?
Because core PCE has become, well, this is just quarter. Tomorrow is month and year, but core PCE has become the new favorite inflation data point for the Fed. Mm-hmm. They are looking at these and be like, okay, what is actually going on with inflation? This is measuring what people are paying. So CPI is what you pay at the register, but this is the opposite of what households are paying. So this is big, bro. Like, you have to get up there. And secondly, this sets up for tomorrow. Dollar's gonna be even more fun now, and I think that's gonna do a lot of dollar strengthening. And then I think there was a lot of discussion in Discord today. I'm like, oh, dollar's bear, dollar's gonna go down. Higher for longer, team. That's all I'm gonna say.
Yeah, no, it definitely looks like higher for longer is the case. You can see that in the yields world today. Ivan, we're breaking out as we speak together to a high of the year for the US 10-year. We are currently looking at 4.71%. I've got it pulled up on my screen here. And this is a big womp womp moment, because if yields keep going higher, what that means is, again, like you're pointing out, the Fed may not cut rates this year. And even worse still, the idea or the possibility of a rate hike is not completely off the table. Although the Fed has mentioned that they don't think they're going to rate hike again, it doesn't mean that they can't if the data comes in. They're data dependent, as you are mentioning with the core PCE numbers. If those come in hot, that's their measurement of inflation that they really like. And if that stays stubborn, the market's not going to like it. I'm talking about specifically the stock market. The dollar could shoot up, and perhaps we get another year like 2022 where, everything is red except for the dollar, which is just bright green. So very interesting. Ivan, what you have any trades on? You have anything you're watching here this morning?
I'm sorry, I'm going to talk slower. I have pound New Zealand buying. I have bought Euro New Zealand, and both of them are going in my direction. And then I'm just going to look for new lower low on dollar pairs, and then I'm going to look for the pullback. So this is going to be even more fun. So I am on pound New Zealand. I haven't really done a good post on that. I'm sorry, I didn't have internet. I only had my phone, but that was entry. And it's going all right. It's all right. So dollar strengthening means at least Aussie and New Zealand weakening the most when dollar strengthening the most.
Yep. Very, very interesting stuff, Ivan, to see. You got the VIX up this morning too, so some volatility is coming back into the picture. You got gold shooting up here. Again, this is you might be confused by this, not you, Ivan, because you're a genius, but for the audience, right? The concept here, the combination is the sweet spot for gold. It might be a little confusing at first because you might say higher for longer. Why is gold up? But remember, we got a dual print here this morning. GDP was light, but inflation was hot. You combine those two things, Ivan, are we back to gold bullishness because of stagflation? That's a little bit of an interesting story to keep an eye on too, because remember, guys, gold typically goes up with a combination, a good old mixing pot of fear mixed with economic data decline, mixed with sticky inflation that makes people really worried about keeping fiat currency. What do you think?
I love it. That's why we're traders. This is our daily bread. This is what we do. This is what we need to analyze, be ahead of. So you have spent a lot of time educating your audience. Now the time is come to, are you able to put that into a trade idea, a trade plan? Are you able to execute when you're supposed to? Are you able to commit when dollar is falling or going range bound? Are you still able to look for the bullishness? And are you still just waiting for the data points to tell you, okay, we're actually going to go stronger again? Okay, cool, fine, fair enough. What are you going to do about it?
Right, exactly. And that's the thing. Kevin made a good point here in the chat. He said, simple as this: if inflation is hot with GDP also strong, it's not so bad. That's exactly right. The problem here, the freak out moment, is when GDP is kind of mixed or lighter than expected, like we got with advanced GDP, this number, but then you also have stubborn inflation. That's what you don't want to see, right? So really some interesting data coming out this morning. Oil finding what seems to be a bottom, but we'll keep an eye on that one here this morning. VIX up 5.33%. Stock market really hating this move, although I do have a short on the Russell, which is going well. Some of my long positions on the tech side of things looking not as good here this morning. So I've got kind of a mixed bag, but I'm also long silver. So I've got a couple momentum trades that are working out today, and a short on the Russell doing okay. And some of my NASDAQ stuff is pushing back on me. So I got a mixed bag here this morning. Ivan, thanks for sharing our trades. I know you jumped in here. Did you just message Chandler, let me in?
Yeah. Yeah, I did.
Okay, what's your last point? I gotta move on.
I'm gonna set up for those in the Discord. I will set up free 30-minute calls for tomorrow.
Perfect.
So
Yes.
you need to get quick.
So Ivan is modest. He never wants to self-promote. So I, the self-promoting master, will promote for Ivan. Listen, Ivan does coaching. It's something he's specialized in. It's not something I do. You have to have a lot of patience, and you have to have the ability to work with people at their own pace. Ivan's an expert at that. He does coaching. He's also going to be doing for Discord members. If you're somebody in our Discord already, please message Ivan immediately, because he is going to be doing some awesome free value stuff. He does coaching webinars for members, but he also is going to be doing some 30-minute calls. Is that right, Ivan?
Yeah.
Amazing, guys. So take advantage of that. If you're in the Discord, message Ivan right away. Take advantage. I imagine that's kind of a first come, first serve thing. So please message him now.
It is.
And yes, I'm sure you're going to get lots of messages. So with that said, guys, make sure to go subscribe to Ivan on his own YouTube channel. Ivan, thank you for joining. And we're going to move on with the show. So thanks for jumping in and helping out.
Thank you for having me.
All right. Good stuff. Thanks, Ivan. And next up, we got Marco coming on. Not sure where Miko is. We're missing him. I got to apologize for Marco for keeping him waiting, but we've got a busy morning this morning, and I'm very curious to see what he's got for Technical Thursdays coming in just after this quick break. Real quick, I want to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, we are back with Marco. Hey, Marco, it's just you today. No, Miko. I first of all, I want to apologize for the delay in getting you on here. I know you had to wait.
That's okay.
Appreciate your patience on that, guys. I just want to real quick as we get started with this session. Every Thursday, we have usually Miko and Marco come on to do some technical analysis, taking a look at charts that are looking interesting here. And we're joined by the one and only Marco. I got my clap sound here. Got the claps for Marco. How's it going, man? Good to have you back on the show.
Great to be back. Thank you for inviting me again.
Of course. Marco, the market is all over the place. We've got, we just had some crazy data that came out, and it looks like inflation problems are persisting. As you know, even if you're not a fundamentalist, you know that causes the markets to go crazy. So what are you watching, Marco? I'll let you take over the screen for a second. We go through your watch list.
Sure. So for today, I really don't like this last candle. Everything was looking pretty good until this happened. So EU was looking kind of flat and range bound, so I never had my eyes on this pair. But EJ was in a really nice uptrend, and I was definitely looking for some buy setups. And this candle kind of messed up my whole plan. But it is what it is. You never know what's going to happen in the market. So right now I'm going to reevaluate. This may continue this bearish momentum. If it does, I'll look for some sell setups for now, being a lot more patient. Aussie US dollar, I was looking to get in on a liquidity sweep because this was looking pretty flat, pretty corrective and range bound. So I was looking to see a rejection of this area, and this should have been my entry candle, but I wanted it to close a bit higher, right? So now that it moved all the way back down, my risk to reward is no longer that good because I'm mostly aiming for that bottom of the range, something like this, or let's say a little bit below that range. So If the entry candle was higher, would have been nice. Now this is kind of invalidated. So expecting more range-bound price action here. Let's see if this momentum can continue. Not on the watch list. AJ was looking absolutely perfect up until the last candle. Very nice uptrend, very strong. Was looking for some buy setups. Now I'm going to need to reevaluate as well. Pound, same story. I liked this bullish momentum, and then this huge red candle negated the whole uptrend. NJ is going to be the same as the Aussie and the Japanese yen. Was looking for buy setups, and now we're kind of printing almost even a large V reversal. And I know with a V reversal, markets like to range a little bit and then continue dropping. So my bias on all of the pairs is for the price to go down. But I still need to get the evidence. I still need to get the next candle, preferably printing a nice bearish pressure like this and continuing with the initial push down, because news candles, they are unpredictable. Often they just range around. So price action just ranges around after a news candle. That's why I need to see the price really commit in the next hour. So it all depends on what happens in the next hour.
Yeah, and so Marco, the dollar index here is bouncing up today off of what looks to be hotter than expected inflation readings. And so you mentioned a lot of dollar crosses there, which would kind of make sense as to why a lot of them have had just big, reversal candles or trend stopping candles in the meantime, just because of the dollar index bouncing up here this morning. At the same time, we were just speaking with Ivan. I was asking him about gold, because again, we're seeing some interesting data that could suggest, inflation's going to stay sticky, but the economy is potentially slowing. So if you get that combination, gold starts to look interesting. I know it's a bit range bound here recently, but I'd be curious to get your thoughts on gold, whether it be, what you'd be looking for in terms of momentum one way or the other, or mean reversion if you're using your other kind of approach. What do you think on gold right now?
So on the 1 hour chart on gold, my play would be as you said, a mean reversion of this small range. That's because I focus on only the last 3 to 5 days of price action. So I would look to see how the price can react in these areas. This looks very flat and very corrective. I would look to see if price can reject these areas, and then I would look to sell the top and buy the bottom, targeting the next liquidity area. If I go to the higher chart, so let's look at that, the 4 hour, my bias is still going to be to the downside with this major bearish leg, with again a bit of pausing, ranging price action, which I don't really like to see when I'm looking for sorry, my alarm just went off, for a sell setup. If I bump it up to the daily, well, on the daily, again, this large red candle is showing me a warning sign. So my bias for gold would be to actually probably go down, right?
Sure. Yeah, and it has
been bias at least. But as you said, no one really knows, because the fundamentals you said were to the upside, correct?
Yeah, they're just they're looking a little bit interesting recently with basically a slowdown in the economy. If that is coupled with inflation staying problematic, that's a lot of times where people will flock to something like gold, because they're afraid that their purchasing power of their currency could dramatically decrease. That being said, though, I don't love the technicals right now for gold. If we start to see breakouts and pullbacks and, that sort of pattern emerge, that's the environment where I like to trade gold a lot. Like when it's trending like this, that is a sweet spot for me. I'll buy, shallow pullbacks even. But where we're at currently, we're kind of just not moving with a lot of momentum. The big question for you today, Marco, is the S&P, the NASDAQ, they are really seeing some pressure. I think we spoke about this last week. You mentioned that momentum looked like it had shifted. You may have been right about that, because I think the last time we spoke, the S&P, the NASDAQ were trading back up around here or here. I can't remember exactly, but what are your thoughts on SPX here this morning?
Sure. So let me take a look at the S&P. So on this 1 hour chart, I'm not seeing much. I'm not seeing that really big commitment. So let's bump it up to the 4 hour. And on the 4 hour, looks like we tried to push up a little bit, but then the sellers just kept pushing it down. So the sellers are back in control, in my opinion. Again, if we bump it up to the daily, this looks like a major correction. So the bulls did try to bring it up, but looks like the sellers are just keeping control for right now. So I would definitely expect more downside for the S&P, especially on this daily chart. I mean, if you just gauge the momentum, like I said in the previous stream, if you gauge this momentum, the technicals are telling you that it wants to go down. So
yep. Yeah. Another new one for you, Marco. Type in RTY on your trading view. So this is I have a short position on this one, so I'm asking you just because of this. So this is the Russell 2000. This represents, in case you have not heard, I'm not sure if you have or not, the Russell represents small cap stocks for the most part in the United States. So when we talk about the S&P 500, you know, that's the big 500. When you talk about the NASDAQ, the NAS 100 is a lot of big, heavy tech companies. And the Dow is, of course, you know, those stable, steady 30 companies. But the Russell or the RTY is smaller companies, and 2,000 of them, right? So there's a lot of small companies, small to mid cap companies. I currently have a short position on this one, so I'm just curious from a technical perspective, what do you think about it?
Sure, let me take a look. So for this one, on the 4 hour, I can see pretty much a similar story to the S&P. I mean, even on the daily, just major selling pressure. I think on the 4 hour, you were looking at this sort of a descending channel, correct? So rejection of the trend line. And I really like this play. I mean, my bias for this on the daily would be to go down, and then the entry would be like you executed on the 4 hour, rejection of the upper trend line, let's say, because the overall direction is definitely to the downside, but just more corrective when I compare it to, let's say, Forex. Forex likes to really have long legs, small pullbacks like this. So again, I have found in stocks and in indexes, you're going to get this more corrective price action that kind of moves in a channel-like fashion, which in the end is a downtrend. So all instruments have a specific way that they trend. I have found stocks trade more correctively with, let's say, more corrective pullbacks. The momentum legs are kind of smaller. It looks exactly like this. So I like your play. I would do the same.
What I love about the indices personally, Marco, is that, you know, if I show you this chart really quick on the NASDAQ, what I absolutely love about the indices is that they are very bipolar. And I love that about them in the sense that when they're trending up, it's almost like they can do no wrong. Like there's just a very nice, you know, clear upward trend, and the market sentiment is very positive. And pullbacks, you know, get bought pretty aggressively. Pullbacks aggressively bought. I love to trade that environment. But then also the tricky component to indices that I think a lot of people lose track of is that they do not always do this. They sometimes turn into what I like to consider as like a drama queen market, which is they, you know, just drop aggressively. And then there's these sharp bullish rallies, and then they drop again, and then the sharp bullish rallies. So I think when it comes to trading indices, what some people dislike about them, I think, is that their nature can change dramatically and suddenly. But what I love about that is that when you can spot those changes, you can trade them and make pretty good money with some of these moves. I mean, the risk to reward on indices to me is the best I've been able to find it in the financial markets. Is if you're right about an uptrend, that thing can just float higher. And I think you've seen past some of my better trades. I've also had, you know, periods where I'm just dead wrong and I lose trades numerous times in a row, but that's just for me where I've liked my personal stuff. So I guess to turn it back and ask you a question, what's your favorite chart of any, and why? Is there a certain characteristic or nature to it, or, you know, within your back tests, you found something that you like, and which chart is it?
So yeah, I just wanted to say about the indices. When they start, they just keep on trucking. Like
they just don't stop. A lot of momentum at times, which I love as a trend trader.
Yeah, of course, 100%. For me personally, it's gonna be the Aussie US dollar on the 1 hour chart because they have
I know you've been
lot
loving that one, especially recently.
Sorry.
I know you love the Aussie dollar, especially recently. You've talked about it a lot, I feel like.
Yeah. I mean, I just have a lot of screen time with it, and I can spot some nice price action pretty easily. Like this, we took a flag set up here. So what I like about it is that the momentum is nice. It's not really volatile. There's not a lot of wicks, and you can really easily spot nice clean pullbacks. So that's the reason I like it. Like the moves are sustained, this uptrend as well. There was a flag here. And when they happen, they're not that hard to spot, and it's really easy to also distinguish, let's say, range-bound price action from trending price action. So I'm actually trading both some trending entries on the Aussie US dollar and a range-bound entry, which I wanted to implement here, but again, the risk reward just got screwed when we reached this particular area. And I just wanted to say, so every single at least currency, in my experience, moves a little bit differently. So that's why it's so important to really backtest every single instrument that you're trading, so you know exactly how that particular instrument moves in a trending market, volatile market, and a range-bound market. I know a lot of people just kind of have 40 instruments on their watch list, and then without any experience, they just start executing trades left and right. Well, I would say start small, specialize, really learn one instrument in depth, and then you can expand your range as you gain more experience.
That is so true, Marco. And I want to also kind of follow up with an example of something that I personally have learned. As I've mentioned, my sweet spot is really these top 4 charts. The reason that these are the top 4 charts on my end in my watch list is because these are the things that I trade and have made the most money out of over the years that I've been trading. There's something I've learned within that time. If I were to never be able to trade anything else on this list, I'd be able to make money. However, I would be really sad to not be able to trade gold. Gold is something else I've traded for years and really like to trade as well. But my point is, what I've learned is that, and this is going to sound really silly today, most of the time, 95% of the time, I do not short indices. They're very, very hard to short because their very design is to grind higher over time. So I mentioned that, during 2022, this was such a hard year for me because, and I've been open about this. I had a down 30% year in front of everyone, Marco, and that sucked.
Yeah, I can imagine.
Because the transparency that I try to bring on my channel and my content, it comes at a cost. When that was happening, the psychology of it, I was getting married that year, and I just had to try and push that out of my head as much as I could. But I was trying to even, short. It's so hard to short indices that even in a down market, it was hard to short the indices because these pops were so aggressive. They were so, they call them face ripping rallies, I guess, and down markets. Some of the
stop loss hunts, right?
Yeah. So everybody who's short has to cover very quickly. And so, I got whipped out several times, even though I was bearish, or taking shorts to try and hedge some of my long positions and things like that. It was just a really tough year for me. So I do have a short right now on the Russell, but if I have a short, it's small and it's contained, and I'm very quick to get out of the way of it. So I have a short right now, but it's something personally that I've learned through the things that I love to trade the most. If you're going to short the indices, you got to keep it tight. You got to keep it small. You got to keep it contained, and you cannot, you have to cut that trade so quick because indices can, rise for 3 weeks straight on you. So you don't want to try and short and just hold on to it. What's I guess, again, we'll turn, this is educational, I hope, for the audience. That's one from me. What about you? Is there something that you've noticed, I never do this, or I always do this, somewhere within your strategy, or, something that you always have to check the box on for your own trading?
Well, for me, it was something that I gained with experience, and it is just the overall look of the price action. So it's not something I can really explain in words or teach someone in, let's say, 2 hours, but it is something you gain with screen time. It is just the way the price moves when you spot a clean uptrend and then you can exploit it, and then you compare it to, let's say, a very range bound and a corrective market with loads of wicks. It's a lot of factors combined into one, and it's something that I gained with time and with enough backtesting, screen time as well. So I would say that is something that really clicked with me, is that it's not only this, let's say, impulse that I'm focusing on. I'm looking at also the last couple of days of price action, looking to see all the candle formations, looking to see how many wicks there are. And it's all kind of in the subconscious, right? So with technicals, it's all about basically your eyes, only looking at the candle formations, the wicks, the charts. And there's a lot of subjectivity around it, but also there's a lot of subconscious thinking that you don't really realize when you're analyzing a chart. So yeah, I can definitely see an improvement in every single trader when they just start looking at the charts, and then after 1 year of backtesting, they really can zoom into that high probability price action.
Yeah.
So for anyone trying to become, so I just wanted to finish. For anyone trying to become a technical trader, it may seem very complicated and tough in the beginning. It's all about the screen time. It's all about the experience. It's all about the backtesting. With enough time, things will start to click. So it's not like it is with fundamentals, where you get, let's say, a couple of confluences lining up, then you execute. Right. You need some time to really get your eyes used to the charts.
No, that's a really good point. And I think it carries over into fundamentals too. You know, in some ways, if you're looking at a chart, right, technical chart, 100% I'm with you, because you know, there's been some things some common ground that we've found. I love cross-examining between you, Miko, Marco, myself, because there's things that you guys have picked up on through technicals that I've picked up on through fundamentals, and we've come to some similar conclusions. Here's a quick example. We've all kind of acknowledged that a big news candle that closes with a solid body oftentimes leads to more carnage to come, whether it be, you know, sell off, it usually leads to more. From a fundamental perspective, what that would tell me is that when you get real good, solid economic data, or real poor, clearly bearish data, usually that candle is going to close very decisive, and usually it's going to be a persistent theme for some time in financial markets. You know,
like this one.
Yeah. So that's the point. Is you know, different areas, different strategies, styles can reach some similar conclusions, and I think you also pointed out something I think everyone in this room listening to this right now should consider. The reason trading takes so long to become profitable, to become good at, it seems so stupid easy when you get into this. You're like, it's just charts and lines and stuff. You really need time on the charts to understand and to come to these conclusions and to internalize them. It's kind of like when, you know, when I've never had, I don't have a kid, I've never raised kids, but it's like when kids need to be like, when they need to like learn something for themselves, you can tell them 100 times like what they need to do, or like what they don't need to do, or how to avoid getting hurt or something. But until they, you know, touch something hot for themselves and realize, oh my gosh, I can't touch hot things, they will never learn that until they experience it themselves. Same thing with trading, same thing with learning in general, I think.
Yeah, for me, like, I love cars. So when I was just starting my driving test, I was like, this is easy. I have driven a go-kart many times. This is going to be easy. But it was very hard. You know, it was very hard, especially in the beginning. But with time, you just get used to it, and your subconscious does most of the work. So it's all about training yourself, let's say.
Yes, exactly. And with that, I'm going to go ahead and give you a round of applause. That's great points, Marco. Thank you very much for all that. We appreciate you coming on the show. I do want to also just say, as we close out here, guys, do me a favor personally. If you've enjoyed the show, help me out by supporting Marco on his own YouTube channel. So what we do on this channel, and Marco has contributed for some time now to our common goal here, is we say, you know, ignore all the nonsense, no Lambos, no cash on the table, no, you know, no hype like that. Let's talk real trading, and let's do it on a weekly basis with a community of people that are like-minded. Marco contributes to that idea every single week by coming on to the show. And in return, he doesn't get paid to come on here. We just ask that you guys go give him a shot. Check out his content. He's got some great value over there, totally free for you to check out. Marco, thank you very much for coming on the stream. And I guess we'll see you next week.
Thank you very much for the opportunity, and see you next week.
Good All right, see you, Marco. Again, big thank you, big round of applause, Marco in the chat. Again, high value stuff.
Perfect candle.
Perfect candle. Okay. So that's a perfect candle. Speaking of perfect candles, if you're a bear today,
perfect candle. That green candle.
Come on. I need to get some more sounds. I got a couple. If you're a bull, I'm like a mixed bull and bear, because I have some things that are not looking so good. Instant pain, right? Got some instant pain going on. So if I show you really quick some of my not so great setups, I sold a put on XLK, and it looked like this thing had recovered nicely. It looked like I was going to potentially avoid assignment, but I am down a couple grand on this one. So XLK is the technology ETF. I will likely get assigned on that one. Instant pain. So that one is probably getting put into the account here, which is not super fun. Sorry, I'm just having fun. Give me a second. Okay. So what else? What else am I going to get assigned here this week? So I have an expiration date, the 26th of April. That is tomorrow. So if the market stays where it's at, I will get assigned or put the shares tomorrow. XLY, same story. Down a little bit on this one here. Tesla earnings really helped out. It shot the XLY, or the consumer discretionary ETF, back up. So I am going to likely get assigned on this one, which is fine. I'll take the position. I like this ETF quite a bit. I wouldn't mind holding on to it and looking to potentially sell covered calls. The VIX is, let's see, the VIX is up slightly on the day. I'm surprised it's not up more than that. Is it? Am I wrong on that? VIX? Yeah, the VIX is at 17. WeBull might be delayed in their numbers there. Gold coming down. Look at this. Gold reversing. That's not great for my silver trade. What just happened? NASDAQ continuing to tank here. That is a serious sell-off here going on today. That's a 1% almost. 1% on the Dow Jones. S&P down 0.85%. And I'm actually glad to see the market coming down. Even though I have bullish positions in the stock world, I would not mind if we continue to see a push back down to these lows, or potentially break through those lows. From a longer term perspective on my counter trend or mean reversion based option strategy, this would give me a chance to really build into some positions. From a momentum standpoint, from my trend following strategy, I'm struggling to really find any entries on the indices. I already have one. I am short the Russell. Let's get a P&L check on IWM. This tracks the Russell. So we're at $2,000 on this trade. And this is attempt number 3, guys. Attempt number 1 was over here. That was a loss. Attempt number 2 was over here, a second loss. But attempt number 3 is looking good so far. And I do need to trail a stop. For those of you who are inside of our Discord channel, where you can see every trade that we're taking, by the way, I'll probably update my positioning on the Russell pretty soon in the indices room. So anytime I take a trade, I update it in Discord. If you guys aren't already in here, real quick, let's drop the link in the chat. If you guys would like to join the Discord, it is a VIP service. It is not free. Nothing in this world of genuine value is free, except for, the really good stuff, like relationships and love and all that good stuff. That stuff is free. But in terms of a service, you get what you pay for. If you want to get access to our trade alerts, in-depth, real money, again, a lot of times you'll see signal services or things like that, and they're not putting any money on the line. They're just showing you a demo account and telling you how rich they are, right? None of that. This is real trades, real cash, real money, everything real. If you want to see those trade alerts when I take them, again, you can sign up for our Discord channel. Here is the free Discord. You don't get the trade alerts in there, but you can get some analysis and some good stuff in there. If you want to get access to the trade alerts, we'll drop the link here to our Talk To, where you can speak directly with someone on our staff about getting a membership. Come join us if you're struggling out there and you're wondering, what kind of strategies we use. You get access to our strategy PDF library. You get access to our trade alerts when they come out. So much more. So take advantage. if you have not already. VIP group is a one-time payment if you get the gold membership. So we'll drop the link here. Talk to, can we get that link in there? Is it already in there? Am I missing it somewhere? Talk to, here it is. Oh, there it is. It's in there. There you go, guys. Click this link if you want a direct message. Someone on my staff, they'll get you set up with a membership. We've got some discounts going on, so don't miss them out. Also, other side of things, let's take a look at the Edge Finder. Edge Finder, in terms of top setups, we are getting some bullish readings on the indices, but I'm waiting for technical setup. Okay. NASDAQ, I would like to buy the NAS. The oil market's looking bullish. Silver continues to look bullish overall from a technical fundamental standpoint. I like these setups. These are things that I'm watching for potential entries. If I take those trades, you'll see them in Discord. Euro dollar, I have a short position on the euro. I shorted euro yesterday in the VIP room. Let's see how euro's doing. Euro is back to break even. This entry was not as good as I would have hoped for. Here's the daily chart where I took the trade. I'm in the euro. If I decide to close out of this trade or trim my stop loss or something like that, I will update members inside of the group. I do like euro to the short side. Dollar looks strong here with inflation potentially staying stubborn, and meanwhile in Europe they look like they might be cutting rates soon. So we got a lot of stuff. Don't miss out on the action. If you're someone who's been on the sidelines, come jump in, come join the Discord. Also, last call on the Edge Finder discount. It is ending. If you want a copy of our software, the EF, the Edge Finder 45% off sale is coming to a close. Do not miss this discount. Fair warning to anyone listening who, if you do not have the Edge Finder currently and you're looking at your hands and you say, there's no Edge Finder in my hands, I don't have the Edge Finder. If that's you, this is your last chance to get it before the price goes back to full price. And we will never have such a big discount in terms of the lowest price that you'll get it. This will be it. This is your last chance. So I don't know how else to say it. If you've thought about it, if you've been sidelined, it's a one-time payment to get a copy. And yes, this is a sales pitch. I'm shamelessly plugging a product that I've built and invested, me and my team have invested so much time and money into building an exceptional platform for fundamental traders. If you're struggling with fundamentals, if you want to look at the commitment of traders data in an easy to understand way, if you want to look at our top setups algorithm that combines all the different score metrics for different assets, currency pairs, indices, everything, do not miss it. Fair warning. If you need some more information, please chat with us. Click this link. This is your chance to not miss out on the biggest discount of the year. It goes away very shortly. So with that said, thank you guys very much for hanging out with me. Hope this was a helpful live stream to you. We'll have more coverage coming later this week. Tomorrow, we've got the big one, core PC numbers coming out, which will be a doozy. So thank you guys very much for tuning in. Have a great rest of your day, and we'll see you next time. Bye, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edge Finder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.